I believe Andy is coming on next. I'm trying to find a note here. There he is. Andy, you're not in your coffee shop anymore.
No, I'm in smoggy Los Angeles, but maybe even smoggier for many people already.
Right. Actually, you mentioned that. I want to thank, again, Sarah Cohen. She's in the middle of having been evacuated. Speaking of, I see that background there. And she has not stopped being, a tremendous support for the event today. So, well, thank you. And I want to thank you, Andy. You guys have done a fantastic, you've been a great partner in this, and you just probably heard all of the folks that we've brought in for all the panels. Great panelists, great judges, and we have one more panel coming, so don't leave, folks. I'm going to turn it over to Andy, and he's going to take us out of here for the end of the day. Thank you, Andy.
Thanks, Darren, and thank you for the collaboration with Lava and your support and your energetic emceeing today and yesterday, and Len's help. We miss Len. I know he's behind the scenes helping as well and working at the pre-accelerator. Once again, thank you for being involved and your support. So I'm gonna maybe bring in see Darren.
Thanks. I'll just say I couldn't even do this without Len's support. So I appreciate the shout out to Len.
I see Len with the puppet master strings behind you. There you go.
Thank you.
Awesome. So we're bringing on the panelists. I know we had a lot of MIT representation today. I'm not an MIT grad, but I thought I did wear I have to show this, my engineer t-shirt so I could compete with the brain power from the whole cadre of folks from MIT that were on this morning. So we're gonna welcome the panelists. I'm seeing them coming on. I have two screens here. I see David's back. I got Rick. I got Z Holly, who looks, there you go. I got Minnie. I think Shahin's back. Excellent. Excellent. Well, I'm looking forward to the discussion today, and thank you all for joining us. I know some of you were introduced before, and if you see me looking this way so I can look at how you are on screen, it's always funny. Darren was talking about some of the companies this afternoon, and I love the idea of someone coding in the bathroom. I mean, that's what you call committed tech, if someone's cranking code in the bathroom. Anyway, on to investing. We saw great companies today, and I got to tell you that despite being virtual, I think what should I say? We've pivoted. That's the operative word. And I was really impressed by the companies and the kind of the dialogue that happened between the panelists. That was fantastic, and I know many people who are on the VC panel today actually participate in that, so I want to thank you as well. Let's see. I'm going to go around and ask the panelists to maybe briefly introduce themselves. I know David and Shahin, you were on earlier, so maybe you can keep it a little shorter. Hopefully we have some overlap. But I'm going to go, since Rick is new. Rick, if you could introduce yourself, that would be great. Maybe talk a little bit about you and your fund and kind of what you're investing in and where you are. So maybe 2 or 3 minutes.
Sure. By the way, not a green screen behind me. Sitting in Colorado right now. So Rick Smith, Crosscut Ventures. We're an early stage venture fund. Started back in 2008. We're on our 4th fund right now, just finishing up $125 million fund. We do all things early. We like seed, pre-seed. We are relatively technology agnostic. There has to be technology there. We've done a lot of consumer in our past, a little less so these days, more enterprise. We'll invest anywhere in the country. I'm on 3 boards in New York City. So, we've been active, worked with a lot of the folks on the panel here for finding good deals. I've known Andy for too long, which is why
don't confess in front of everybody, Ray.
There's a reason why I'm keeping the light behind me. I don't want to show what I actually look like now. Yeah, we're excited to be involved in Southern California, and I've been doing venture for 23 years in Southern California, and I've seen the development, and it's just, we're lucky we're lucky to be doing it. The air is not so good right now, but we're lucky to be in Los Angeles. And we're seeing more and more people move down from Northern California. We think that trend's going to continue, and Los Angeles is going to have continue to have its moment the next 5 years, I think. Excited about it.
Well, Rick, we really appreciate your partnership and the tenacity that Crosscut has had in terms of building real platform in Southern California. And thanks for joining us from Colorado, where I say the air looks like it's a little bit cleaner. I'm going to go over to Minnie next. Hi, Minnie.
Hi, Andy. How are you?
Good.
So my name's Minnie Ingersoll. I grew up in Pasadena. Andy is actually my city councilman representative. My background is It is actually my father's office in Caltech, where he has had the same office for 58 years. And let's see. So I'm a partner at TenOneTen. TenOneTen is a seed stage fund here. We were all technical founders, and so that's what we tend to invest in. We do all B2B investing, and usually heavy on the software and data side of things. I also host a podcast called the Laventure Podcast. And I think today's episode was David Fleck. So there you go. And I also went to high school with David Fleck's wife. And other than that, I'm excited to be here, and thanks for having me.
David, you may be getting overexposed today between the podcast and the first look panel. I also want to call out with TenOneTen, your partners, David Waxman and Gil Albaz, who are both really tremendous stalwarts in the community here in Southern California. Great firm, and I'm excited to have Minnie, who came from the Bay Area back to the land of milk and honey, where all the action is. So she's been a real force in Southern California. So Minnie, thanks for joining the panel. I'm going to keep going across. Z, I think you've been on earlier, but some people maybe mixed you. So another person, by the way, who's been a real force in the ecosystem. So thanks for joining us. And I know you're with a new firm, and thank you. They were well represented today, and I was very impressed by your partners. I could see why you were enthusiastic to join the firm.
Yeah, I'm excited. Bunch of rock stars. So my name is Z Holly, and I grew up in LA as well. Came back probably about, now it's been 15 years when I was recruited to be the vice provost for innovation at USC. And I'm an engineer and serial tech entrepreneur. And for the last almost two decades, I've been investing in early stage innovators at the frontier and helping scout and connect them in all sorts of different ways. So I am a venture partner with Good Growth Capital. It's actually an East Coast firm, but we invest across the country, and I'm kind of leading a push. I'll invest across the country as well, but leading a push into Southern California. And we will invest primarily kind of in the seed to Series A, first checks 250 to 500K. But we also have this Infinite Corridor Fund, which is more of like a feeder fund or a sourcing fund, and we'll do smaller checks, pre-seed, seed in these transformative science companies. So anything that has to do with material science, sustainability, data science, kind of the deep tech stuff, we love that, and we have this amazing network of folks that we can also call on around the country to help and push these companies forward from the earliest stages.
It's funny, I was chatting with Z earlier, and some may know that the Alliance is closely partnered with the Boston Consulting Group. They did some heat mapping around what is the essence of various innovation communities, and very appropriate today is kind of, first of all, the diversity of innovation, but also a disproportionate amount of deep tech and frontier tech-based innovation. So we're thrilled by the work you're doing and your knowledge in that space as well. Shahin, speaking of deep tech, hard tech, you've been at this for a while. Good to see you back. Thanks for joining earlier. For folks who missed maybe your introduction earlier, could you talk a little bit about yourself and Lux?
Sure. I'm a Bay Area native, Southern California transplant for grad school, fell in love with this place and had a hard time moving. So I've been commuting to the Bay Area Monday through Thursday for the past 8 years after we set up the Lux Palo Alto office. And so Lux has been around for about 20 years. When I joined in 2006, I was the Walking West Coast office. So I was kind of commuting between LA and Menlo Park since then. and pretty much focused on all things hard tech. So we as a firm invest across therapeutics, medical devices, healthcare services, healthcare IT, 3D printing, 3D scanning. My background is in semiconductors and electronics, so I've led our investments in chips, rockets, satellites, driverless cars, mobility broadly, and robotics. And now that COVID has hit, I've been pretty much planted in LA, and I'm dreading having to get on a plane again when things get back to normal. So great to be here.
Well, we'd be happy to have you here full time. So if you need a letter of support, let me know.
Thank you.
Thank you all for joining today. First question I had was, it's hard to have this conference, in the middle of a pandemic and not ask the panelists whether the postman just came to my door and the dog is very enthusiastic. But has the pandemic kind of changed what you're looking at? I mean, is it kind of, we had an interesting conversation on this topic yesterday, I should mention, and Alexandria said they had made, Alexandria Caros said they'd made a hard pivot to companies that were very much dealing with the pandemic. So Kairos had kind of taken on the life science side a very strong pivot in that direction. But I'm curious on the tech side whether this panelist has seen this, kind of unique moment we're in. Obviously, it's changed our lifestyles. Has that kind of driven some sort of big change in behavior around where you're putting dollars to work? So just jump in. I don't know if you want to raise your hand. Maybe it'd be easier. I can call on folks. Who wants to jump in first?
So I can jump in and say that we have not been investing in pandemic-related companies with the expectation that there's going to be a lot of smart people with deep pockets out there investing in, the next great, diagnostic or remote work or remote education startup. A lot of our companies have, in fact, especially on the healthcare side, done a lot of interesting work, and on the manufacturing side for PPE, have done a lot of interesting work there. But from a new investment standpoint, we as a firm have always tried to stay away from where the herds are going, and a lot of the herd right now is going towards that kind of stuff. But we have changed our focus, but in a different way, not exactly focused on kind of the COVID-driven companies.
Are you going to tell us that you can't?
Well, I'll let others answer the question. I don't want to veer off the topic here, but I'll let others answer the question and we can get back to that.
Okay, I appreciate your discipline. Who else? Okay, Z, why don't you hop in?
So I would say also that we were already investing in things that were very appropriate for the pandemic beforehand. So we invested in a company called Illuna, which does preventative anticipating asthma attacks, for example. So it's like a health monitoring, and XCOR, which is excorporeal removal of CO2 from the blood. Different like AI companies that are doing a lot. So Pienso, which is doing a lot of data analysis, which is now they're pivoting to do a bit more around COVID, and risk analysis, geographical risk analysis, which is base operations. So just like examples of things that I think any VC generally thinks very long term. Our funds are 10 years, long. So, but if you're investing in things that are really important when you're not in a pandemic, then they're likely going to become at least as important, if not more so, during the pandemic.
Other thoughts on this? Minnie, Shahin, Dave?
Yeah, I mean, for us, we're a pre-seed, seed stage, deep tech focused fund. And so really, I'll echo Shahin's thoughts in that, we don't really view the pandemic as investable, but I think it's actually put wind in the sails of some of our companies, even more so. And I think it's, encouraged them, we encourage them, and I think they've encouraged themselves to try to think of ways to apply sometimes their technology to the problems that we're all facing. Like it definitely has opened up new ways to maybe apply their technology in a real world way, whether or not there's customers there. It's like they can still be making progress on the tech in ways that maybe is beneficial to humanity too.
So not necessarily change the thesis, but look for applications in markets that have been driven by the time we're in, right, the pandemic. Rick, I know you have thoughts on this. You want to weigh in?
Yeah, Matt, I don't know that we're that much different. We're a long-term investor, as everyone on this call is. I will say, I think just seeing, so I don't care to invest in something that's getting a bump because of COVID. But if it's something that's, if we think that, there's been a fundamental shift in how people are going to work, or are people more amenable to home healthcare, we have, like Dave was saying, and Z, we have some companies that are certainly benefiting big time by COVID. And so I wouldn't play something that's sort of a short-term fix, but I'm trying to figure out sort of what's going to last when it does magically go away one day. What's going to be left, and how are we working differently? How are companies behaving differently? And so we are, putting a little more emphasis maybe when we see a company is like, okay, is there a post-COVID bump, a post-COVID bump they may get, like, 2 years from now? So, I'm not smart enough to figure all that out, but, we still follow the great entrepreneurs. When the great entrepreneurs come before us and say, we think this is what's changed, we'll listen to that and try to put our own lens on it.
Minnie, thoughts on what's going on at TenOneTen in terms of how are you reacting, or what's happening with respect to investment thesis or priorities?
No, I wasn't going to volunteer because it's remarkable to me how little has changed in some sense, how adaptable people are. We like to invest in automation and efficiency technologies. That has really largely remained the same. So no, I mean, maybe it's changed the pipeline some of what's coming in at the top, but no, it hasn't changed all that much.
Judy, did you want to chime back in again?
Yeah. Well, I would say that maybe a little bit of the way we invest might change a bit, and maybe more so for other firms too, but we definitely look at how much runway companies have. And we're actually just yesterday closed a deal that I found since the pandemic started. I think it's the first, we tend to work with our founders for a long time before we invest, but this is the first one that we've invested in where we literally have never met the founder. It was all virtual.
That's my next
but we do.
By the way.
Okay. But
how it's changed how you do invest and how you vet companies. So I'm glad you're bringing that up.
Yeah. So yeah, we should definitely talk about that. But we also, it ended up being oversubscribed, and we're okay with that because we want to make sure that the company has enough to weather the storm. That said, I think that this is a really good time. If a fund has the capital, it's a really good time to invest because traditionally companies at S&P 500, something like 2/3 of the S&P 500 were usually founded in a downturn. There's a lot of advantages of starting a company in a downturn when you have the capital.
Right. So let's transition to that where you're talking about really about how the venture capital industry is working. You mentioned doing a deal with, not really having met the person physically. I am hoping your first deal was a Southern California deal, but I'm not going to put you on the spot.
It came from Southern California and they moved to Indiana. Let's put it that way.
Oh, darn. Okay,
manufacturing. But
okay,
they're still maintaining a presence in SoCal. So
thank you for that. You're making me happy then. But in terms of maybe like sourcing deals, I mean, you can't go to kind of networking events and pitch days. I mean, here this obviously we're trying, part of the benefit that the Alliance is trying to deliver through First Look is providing some early insights into some interesting companies. But in terms of sourcing deals and diligencing deals, can people talk to maybe how that's changed a little bit under this new kind of, we can't be in the same physical room. Though I did see one of our panelists was in the office with his buddy, co-investor, which is, it's kind of novel. So how has that changed behaviors and how you're operating your firms? Anyone want to jump in on that?
I'll jump in on the general thing. We've made a lot of investments, actually. We've been very busy. I think we've made 7 investments post-pandemic, so it's been super busy. I think
take that. They've done 7, you've only done 1.
No, we've done about 6. No, we've done 6 or 7 too. That we knew them. We had met them personally.
Yeah, well, we've met. No, it's fine. I mean, a lot of them we had met previously. A lot of the Southern California based ones, but like we did one that we've done a few where we haven't met them in person. And one of them, I had to ask David. Someone asked, "Well, did you meet Frank and Thomas in person?" And I had to look at David, my partner. And I just wasn't sure. Like I couldn't remember whether or not I had met them in person because I'd met them so many times over video and we'd gone and we talked so much about many different topics. that I felt like I had met them in person, even though in truth I had not. And I think that that's one of the advantages is that one of the things we're doing is we're meeting more people on the team, I think, than we would ordinarily. Like, I think we have had more depth of sort of talking to the CTO who wasn't necessarily a co-founder or other things like that. And then I don't know if it's just me because of my personality, but I also feel like I've been asking goofier questions or something. Like, I do find, and that might be me, but like, I like to get people off their talk track in a way that is a little harder on video. Like there's if you're going out to lunch, just more stuff comes at you that's random, and you kind of see the founder to founder, like the interpersonal dynamics. So I think it has been more important to get a little bit off of the deck when talking to these people. But I certainly believe, and I know that not everyone shares this, but like, I definitely believe you can invest in people off Zoom. And I have some of my best executive hires have been people that I have hired without ever meeting them.
I don't know if people can hear me, but I lost my audio, so I'm going to have to dial back in. So Holly, Z, if you could kind of keep the panel going for a second while I dial back in.
Anyways, I just think that people are all going to learn how to make investments and hire people over Zoom. And it's the skill of the decade, right? Is to be able to be a good, to do well over Zoom is like how people are going to raise their next round of funding and how they're going to hire people and how they're going to build their teams. So anyways, I'm a believer in it. That's all I'm saying. And I'll ask goofy questions, but maybe I always do.
David, you look like you want to jump in, David.
You're cold calling now?
I thought you
no,
knew that.
No, well, and actually, I think you even commented on this in the last panel to me, but like, I think this is like advice to the founders out there to really weave in that personal element to what you're doing, and just that personal touch. Like, I try to do that proactively. Minnie, it sounds like you do too. But I think it's so important to give us that flavor of who that person is, because again, when you're investing, we're pre-seed seed. So it's like, we're really investing in people at the end of the day. So, try to use that awkward 2 minutes before the Zoom when other people aren't there yet to just BS a little bit with the people that are there and get to know them, because that's a lot of what goes into the decision too. Just knowing who that person is. And it's going to be a while probably until we're able to do that in any sort of normal or more normal way.
So I'm back, by the way. Thank you, Z. I'm sure you did a great job. Should we move on to the next question?
Actually, can I throw in a thought that because I'm assuming that a lot of people listening to this are founders and entrepreneurs, and I think that now more than ever, just as a piece of advice, now more than ever, there's going to be funds that are struggling raising a fund, and then there's other funds that are they're investing. And so now more than ever, I think it's really important that you make sure that you're talking to the right investors that have capital to deploy.
Z, can you talk about how would an entrepreneur find that out? I mean, the website's still up. I mean, how do you really know? And not to put you guys on the spot, but if you're between funds or at the end of a fund, you don't really, put a big sign up that says, we're on hold. So can you provide any guidance around how to allow entrepreneurs to get a sense of what's going on at a fund behind the scenes?
I mean, you just asked the questions. It's a really good question, though. You want to find out how big is your fund, how much of it is already invested, how much dry powder do you have left, and that's a big. And also you want to talk to folks that are writing the checks that are the appropriate size. But that's really the big question: is dry powder.
Any guys thoughts?
I think it's fair just to say, tell me what you've done in the last 6 months.
Yeah.
And if you're talking to me, you're like, okay, they're definitely putting money out. Now, maybe she's run out of money, but then you ask the question Zita said, which is, I think it's very fair to say, how much dry powder do you have left? And it's really how many more companies are you looking to put in this portfolio? Very fair question.
I see someone on the chat just said they look at PitchBook to see if they've done deals recently. So that's another way of finding activity publicly.
Well, and that's also, maybe that's also the cousin to, even if you have dry powder, are you actually putting it out? Back in March, everyone was saying, I'm still investing. They weren't. They were triaging like we were, our portfolio companies, seeing, who needs the ICU, who needs, less immediate help. But I get the feeling, and people on this call can answer, I think people are back. I think people truly are back in investing. And what Minnie said earlier, in some strange ways, it doesn't feel that much different. As weird as it is, I'm sitting here talking to you from Colorado, and I'm investing in people I've never met. And if you told me on January 1, I'd be investing in someone I've never met, that no one on my team has met, I'd be like, there's no way. There's just no way. And that certainly wouldn't become our pattern. It has become our pattern.
Right. So, do people feel like in the stock market's going up, and, is the VC world kind of like the stock market in the sense that took a dip and then like, whoa, things are still going well? I mean, does anyone not think that's true, or does someone want to kind of challenge that statement?
I think people think it's going well. I think we're in a bubble, and I think valuations don't reflect the reality of the economic challenges we have over the next 18, 24 months. That's great for our companies that are raising capital now. As someone putting new capital out as well, I'd rather see some greater correction and I think balancing of valuations. They have not, in my opinion, come down very much, if at all.
Yeah,
you're also plugged into Northern California. I was curious from your perspective, and Minnie, I'll come to you next. Do you have any view about, what's happening in Northern California? Are they slowing down at all, or it seems to be little stutter step, in this April, May, but things are back on for business. What's your view? Is that same thing in Northern California?
So, the sense that I'm getting is that there's a bit of feast or famine going on amongst startups, where there are startups that are attractive, and those attractive startups are commanding huge valuations and obviously a lot of investor interest at the expense of others. The VCs are sitting on the same pool of capital, and they have to put that capital to work. Obviously, COVID has created this environment of perhaps a little bit more heightened awareness of, I wouldn't use the word risk averse, but I would say people are more sensitive to and aware of risk, and they are kind of crowding into the companies that are more, I guess, clearly out of the woods than others in their own cohorts, in their respective cohorts. So that's driving up valuations and creating very, very competitive dynamics. A lot of founders are not, taking meetings, and a lot of VCs that are able to take meetings are advantaged relative to those that won't or can't. I personally, for example, right now I'm fighting in a very, very competitive deal, and I feel disadvantaged because I haven't met the founder versus others who had relationships with the founder prior to COVID, and founders not taking any meetings. So I feel like as if the face-to-face aspect, although it's something that is not needed for an investment committee to get comfortable with the deal, in order to win a deal, it is something that could make or break or determine whether or not you get an allocation.
I just want to double click a little bit on what you said there for a second. It sounds like you said people are maybe moving a little bit more risk adverse, so they're kind of selecting a certain type of deal profile. Does that mean it's slightly later stage, or is it just kind of market the other risk factors? Are they looking for things to be further along, or do you mean just kind of sectors or types of businesses?
I would say within a given cohort, if pre-COVID, let's say, 3 of 5 companies within a cohort would have been able to attract term sheets. Now it is every investor out there trying to jam into one of them within a cohort of companies at a similar stage. I'm not sure if the other folks on the panel have seen the same thing.
Others want to respond, Minnie? I'm not going to respond to that. I know you wanted to say something.
Yeah, I'll agree with that. I just, Josh Koppelman from First Round Capital, he spoke it up front, and he said that their average time frame from first meeting to term sheet had gone from 90 days to 9 days over the course of a decade. And then I just heard him on a podcast where the Connie Loizos asked, is it 9 days or has it sped up or slowed down in a COVID world? And he said it has gotten faster. So those hot deals are very hot. And he said it's less than 9 days or it's gotten faster, which is crazyville. So I would agree with that feast or famine concept. The thing I was going to add, though, to I think what Rick was saying about sort of the March, April, were people investing or whatever? We also just looked at our pipeline, and our pipeline was a lot lower volume. So our pipeline just slowed down for a number of months. And like everyone's been saying, like if we have a fund that we need to deploy and less is coming in at the top of the fund, I just want to leave the message to entrepreneurs that it's still a very good time to approach VCs because we are very actively investing. And if our pipeline's a little lighter, it's a great time to reach out.
So I
yeah, it's really true. I mean,
sorry, David, go ahead.
Go ahead, Z.
It's all over you.
Okay, yeah. So it is true. Just to reiterate that if you have a fund, you have money to deploy, and you deploy it over 18 months to 3 years, and that's you got to do it. So it's a good time from that perspective. And we're lucky because we have actually our pipeline didn't slow down at all. I feel like I'm totally overwhelmed, but I think we as an investor we do really early stage, and so then there was a deal, for example, where we helped them out early on. We were a seed investor, and then therefore we got an allocation. It's a time when it's really good to have been a seed investor because they oversubscribed in 24 hours. So just the tips to the venture funds is like maybe going earlier is not a bad thing.
Not 9 days, it's 24 hours. It redefines shotgun wedding, I guess. And you don't even get to meet them in person, Rick. Sorry. That's old school.
Well, Andy, the point I was going to make was I think I would encourage people that are watching this just to reach out to people that they think might be a fit to be an investor. And Minnie, you know this better than anyone. I've kind of espoused this principle, like don't be afraid of the cold email. Like you have to do it the right way, but the cold email, don't assume you have to get introduced. It's always better if you can, but sometimes on a volume game, you don't maybe have time to track down the best way to reach every person. Do a very personalized but cold email is like a secret weapon if you can do it.
Anyone else?
And we
always hear, it's got to be a warm introduction. If you can't figure out how to get to a VC, you're never going to build a company. So what do you guys think about, David's view that the cold email could work? Anyone else do a deal or through a cold email, or if you don't have an introduction, don't bother? Thoughts? I want to look at Rick Smith.
Well, I've been doing this 23 years and I've done one cold email. So I will say I just saw one out of MIT that we chased down and we actually were getting close on it. So it's not impossible. I would encourage just for me to manage my inbox, I just can't deal with all the emails that come in. I just can't. So the cold emails tend to, you catch me on the right day, I'm reading it for sure. The wrong day, it's just being deleted without looking at it and not even responding to it. And I hate to say that because I used to be someone who responded to every email, even if it's we're passing. So, but if you don't have a way in, fire away. But what Dave said, very important, what he said was personalized, right? If it's a hi, fill in the blank, and sometimes it literally is hi name, I don't even look at those. But if it's Rick, you invested in Narvar. We have something that we think could be similar. Okay, there's someone who did the work, saw that what we do, and has some analogy to what she or he is doing. Great, that will cause me to read the email and treat it, up there with the ones that come in from good sources.
Well, it's funny, we always tell someone like myself who's been both an entrepreneur and a venture capitalist, when you're running a company, we work so hard to segment customers and kind of target customers. But for some reason, when it comes to VCs, I find many entrepreneurs just hear money and then they feel like every VC is for them. And you really, just like you would on kind of trying to track early customers, you target what vertical they are, kind of how to get to them. So doing your homework, and I'd say whether that makes it into an email, David, or figuring out, who's in their portfolio companies and whether you have an investor or an advisor. I think that's super important work. And for some reason, and entrepreneurs who I have a huge amount of respect for and who work really hard, when it comes to investors, it tends to, the level of discipline there just doesn't seem to, match up against, I think, some of the customer work. What about other ideas in terms of accessing VCs? If you're, I think it's a good discussion. I want to kind of go a little further into it. I don't know if it's changed at all because of coronavirus in the sense that there's not a lot of in-person events. It's a little harder, like today, to meet people. You can't, bump into them at the coffee table or having a cold beer. So any other ideas? Z, I saw you raising your hand.
Yeah, so I will just really reiterate not just the personalization, but making sure that you're targeting the appropriate investor. So if you come to me with a pitch for a new beverage company, I'm going to be annoyed because that's not what I invest in, right? But
unless it's alcoholic and it's cocktail time.
Yes, send me some samples. Maybe I'll rethink that. But and like LinkedIn, I think that there's no person on the planet that I can't get in touch with, through LinkedIn, so there's got to be some way to get some sort of a warm introduction. That said, I do think that there are certain, first-time entrepreneurs. I mean, every serial entrepreneur has been a first-time entrepreneur at some point. There's undiscovered innovations of people who don't look like your stereotypical entrepreneur, and they don't tend to have the same networks. So I'm very sensitive to that, and I think that, anyway, but I also feel like, so this company, the investment that we just did that was, where we hadn't ever met them before, I met them at a conference. And I would say that conferences, when I'm speaking at a conference, I tend to be much more open to hearing from people because I've put aside that time, and that's my mindset, is to meet new people. So I would encourage you to see ways of, whether it's to actually pitch or, they had a networking service that was pretty good called Brella.
Yeah, I'm familiar with. Anyone else in terms of accessing VCs? So only the next question. I think it's really.
Andy, I just have a question maybe for the panel. Do you guys feel like you're seeing more companies these days? Because I just know for me, my scheduling is such without trying to leave 15 minutes between meetings and this, that, and travel. We're seeing more companies, and I think so. The access to VCs has probably been, for us anyway, has been better. Is that your guys' experience as well?
Yeah, of course.
So the aperture is bigger and is more wide open. I mean, is that your view? And I think part of it is, you just mentioned how busy you are, Rick.
Just the logistics of the timing. I can just do a half hour Zoom call versus maybe planning a 45-minute meeting that runs long and someone's late and I got to go coffee somewhere. It's just the efficiency is higher. At least I feel like I'm running at higher efficiency.
Yeah,
even if you're in Colorado.
Well, I was gonna say with Rick, I agree with that. But I think and I don't know what the appropriate N is, over time. But like, you can have those 30-minute, and then next time it's I'll give you an hour now, and it's a different vibe too. You have to just kind of accept that. At least for me, because I jokingly sometimes during a meeting, I'm like, all right, this is the coffee, tea / beer meeting because we would have that anyway. We need to have that. Like we need to get to know each other, whether it's LPs for us or companies that we're investing in. But I think just understand that it may take a little while. So feel free to, kind of have that next meeting booked pretty quickly because I think once you get that initial inertia, you want to keep it going.
In some strange way, I feel like I'm meeting people more than we did before. Not in person, but seeing them more because it's just and meeting more of the team because it's easier to schedule via Zoom than, in-person meetings. But
do you think, I want to go back to the shotgun wedding one-day deal. These micro slices of interaction, by the way, you can get Zoom fatigue, do 10 of those in a day, right? Back to back. But do you need then, in terms of getting to a point of understanding the texture of the company and the team, have more of those touch points so it takes longer? Or I'm just thinking there's only so many hours in the day. So if you think you got to kind of dig deeper and have more of those touch points, because it's not like you spent 3 hours, at their lab with the entrepreneur. What do you think? More touches or just lots of small bites. Minnie, you want to? You're shaking your head there.
Yeah, no, I'm all over the place, kind of agreeing with it, which is, yeah, we have. I mean, I think I said this. Like, I talked to more people on the team as part of diligence. I then was able to really quickly. I'm deep in one right now where I was easily able to like call all the previous investors from the pre-seed round. I was able to call a couple customers really quickly. I was able to just do all of that in really rapid. And so our diligence went faster because I just sort of bopped it all in. I mean, and I'm I agree with Rick in some sense. I worry a little that the insiders have gotten more insider. And so like, there's a little bit of, I called up all my other co-investor friends and said, who in your portfolio wants to extend their runway? Because we'll write their seed plus check. Like there's a little bit of the people, like I'm not going to conferences and so I'm not having that serendipity. So in some sense, I feel like the people who are in my network are more into the network. So there's pros and cons.
Absolutely, I think that's an issue.
But at the same time, I'm diligencing a company in Ohio right now that I wouldn't have run into anyways. So puts and takes.
Yeah, it's hard because you think about this conference and as an example, it's great and we had great companies and it's been, I think, very educational. But once again, that human connection is really, I think, a lot more difficult. And we have people trying to create some connections on chat, but creating the networking aspect in the virtual world, I think it's still quite challenging. I want to be mindful of time because we got 12 minutes left and I have a couple more questions, and I see people have been answering them on chat, so I appreciate the panelists doing that as well. The first look is all about university-based spin-outs. They tend to be heavy science, deep tech-oriented. Most people, actually everyone on this call, has worked with kind of deep tech spin-out companies, and you see lots of entrepreneurs. I'm just wondering if there's kind of maybe behaviors that you think are most common that you say, hey, if you're going to give them some advice, think about that kind of academic researcher. What advice would you give them to help them kind of accelerate the commercialization of their business that is maybe specific to the worldview that maybe many of them share?
I can take a stab at it. A lot of academics come out of the academic establishment with the expectation of venture money simply being an extension to DARPA or NIH, NSF dollars that they raise to fund their research. And the academic community is one where you are rewarded for adding a leaf to the tree of knowledge and finding broader implications or applications for a discovery. And neither of those necessarily have a direct relationship with commercial success or what we're solving for here as investors. So I would encourage a lot of founders who are aspiring to take technologies out of universities to have a completely different perspective on their assets and think about, okay, how is this going to be the basis of a very, very exciting business? And what is an exciting business? An exciting business is one that can grow very quickly with very little incremental capital, is one that can generate massive, massive margins with margins expanding, which is the opposite of what normally happens when margins, collapse. And 3, be able to go into other adjacent markets, whether it's through M&A or through, developing more technology, but the ability to grow beyond the initial market that it's going into. And none of these questions are questions that scientists ask themselves earlier on in their careers. So I think switching that mindset is one that I think a lot of academics should do before they aspire to go out and start companies, as opposed to an afterthought. And I feel like as if these questions are questions that a lot of founders in those areas don't think about until after they start talking to investors.
So I think, there are different muscles, right? There, that need to be used in academia versus translation, things like that. Anyone else? Z, I think you've lived this world.
I lived it for like 2 decades, and it's working with academics who have these potentially world-changing innovations. And I think that there's a couple ways of doing it. So building on what Shahin said, for sure, like if you want to become an entrepreneur, then you need to completely shift your mindset. You may not want to be a full-time entrepreneur. And so, and in fact, I think that most of the most successful academic startups are ones that are led by folks that are not the professor. They may have been the postdoc, although yes, you do have to change your mindset, right? But also, you can bring in talent, make sure that it's not the person that you met that's in real estate because they're in business to run your biotech company. They're different kinds of business. So, and also just be really honest. If you have a hole in your company, then acknowledge it and say that you're planning on bringing in the right CEO, because at the pre-seed level especially, we'll invest in a startup even at seed even if you're not going to be the CEO long term, as long as you're coachable and or you're willing to bring in someone pretty quickly.
And David, this is all you do, right? I mean, this is you're dealing with academics out of Caltech. What's your view? I know you're relatively new at this, but I'm curious. You must have some thesis.
Yeah, I mean the basic playbook, if you will, that we think is important is number one, and this is, I would encourage the scientific founders to just think about this. Number one is the science known or unknown, because it's really hard to get investors to invest in something, or at least for us at a pre-seed or seed, to come in and put money in if the science is still unknown, because there's other basically non-dilutive equity, there's SBIRs, there's grants, there's things like that to get them further along. So for most early investors, it's going to be too large of a bridge, or too difficult to get them to say yes if the science is still unknown. But then beyond that, just understand that we're going to be looking for really like scientific domain expertise and then also business. And so there are unicorns that can do both, but oftentimes it's going to be, we're going to assume the scientific founder has got the science. If they who else is going to, who's the leader on the business side? And then when it gets to product market fit, it starts to get into really be open in terms of like, what the first market might be, and err on the side of, at least from our perspective, getting into market as quickly as possible, rather than waiting to get into the perfect market. Because oftentimes that path, even if it's not the first market that you think is the biggest market, by going in that market, as long as it doesn't stray from the big idea that maybe you're more excited about, you're still knocking things down as you're making progress. And we just love seeing companies go in the market pretty, really quickly. I mean, we're pre-seed seed, and 3 of our companies are revenue generating, deep tech companies. So,
I think was it Minnie? I think I saw you waving.
Yeah, I feel like I look so academic with my background. I'm very pleased with my background today. The thing that doesn't change whether you're coming out of academia, I still want to know that you have talked to customers. And sometimes it's a little less obvious, but it's still like, have you done 100 hours of primary research? Have you talked to 50 customers, 30 customers, whatever it is? And I don't know that you have to have a business person on the team, but someone on the team has to be talking to customers about what the customer need is and identifying that early and getting into market, like David said.
In the I-Corps program, if people aren't familiar with that, is a good one to really test the customer proposition early on. So it was interesting on the investor panel yesterday, focused on life sciences. One of the questions that Maury asked from Caltech is, how early and when do you need a business person? And there's, disparate points of view, but most of it on the life science side is so science driven that they've kind of pushed off the bringing on of a business person, because I think a lot of it is dependent on getting the science through so many gates, and you can access capital in a deep R&D process. But I think on the traditional tech side, there's an expectation, as David mentioned, that a product's going to be in market, right? Who are you going to sell it to? What is it going to be? How do you value that? So I think in the tech side, that the business know-how is certainly,
Andy, you're touching on a little bit of a pet peeve of mine, because academics, and I'm saying this as an academic myself, They kind of look for that token business person. It's okay, here's our business person. All right, give us money.
Yep.
And that's, that doesn't necessarily mean that they've gone through this whole exercise, this whole process of changing their mindsets. You can't have that academic mindset and bring on someone with an MBA who's a former banker, lawyer, whatever, even venture capitalist or entrepreneur, and expect, investors to come in and say, great, you can have that academic mindset, but we're ready to go. And investors that have been around the block can smell this from a mile away, and they run away from these kinds of things. And so putting on that veneer is not going to be an effective one in the long term.
And I think your point is the founders need to go through a bit of that entrepreneurial reconciliation. You can't just tape it on, right? It's like, oh yeah, here they are. It's a mindset thing. And, I want to be careful, we're about to run out of time, but how do you think about making that shift? How do you Shahin, you pointed it out, you have to make that.
Yeah, so there's a couple of companies that are being brought up in the chat. So Broadcom, the telecom and optics companies coming out of UCSB. There was a time 20 years ago when I was a grad student when there was an arbitrage opportunity, given the nature of the market, given the telecom bubble, the dot-com bubble, where there was an arbitrage opportunity for de-risking science. That arbitrage opportunity only existed within that window of, let's say, 7-8 years. And that window closed over a decade ago, since the last financial crisis. And so we're no longer in a realm where you can say, okay, I'm going to de-risk technology and sell my company for hundreds of millions of dollars, or maybe even $1 billion. That opportunity doesn't exist unless there's a few companies. I mean, I funded this company, Nirvana, which was acquired by Intel for $500 million before they had a product. But that was not our investment thesis, and they got lucky. They didn't have a chip. That company would have had to spend another, 50, 60, 100 million bucks, put out multiple generations of chips and build a real business. And the reason why it was acquired was because it was the first of its kind. We funded this company before anybody was even talking about AI chips. I was saying, what is this, an accelerator company? Is this a DSP? What is this again? It was not even in the vernacular at that time. So if what you're doing is super cutting edge and you're an N of one company, then if there's a deep-pocketed, desperate acquirer, maybe they will buy you for de-risking technology. Otherwise, you're on the hook for building a business. And investors want to hear that business case. They want to build an investment thesis around a business. They want to underwrite a business, not a technology.
I think that's a really important point. We are getting to the end of time, but I thought I would let each of our panelists do a small commercial about the company that's in their portfolio that they're kind of most excited about, and maybe kind of why. I mean, we're all kind of, these are like, your puppies, and there's one that I suspect that you really think is awesome. So, Minnie, do you have, which puppy is kind of the one that is in your stable there that's really crushing it, that's super fun, that you want to at least share with the group? And maybe it's going to be indicative of the stuff that TenOneTen does, right? If there's something you want them to take away.
For some reason,
you love all your puppies.
I know the one that I got to think of a different one. Okay, I'll just tell you about TrueAccord really briefly. It's automated consumer debt collection, and the reason it's so awesome, it's consumer debt collection, which doesn't sound amazing, but their NPS score is 60, which it's hard to achieve when you're giving away bunny rabbits. It is, they help people actually resolve their debts, and they do it all in an automated manner. And they have been knocking down their huge customers like Amex and Capital One and PNC Bank because they're completely compliant, because they are not relying on phone banks of people to do this. It's a huge legacy industry that hasn't been disrupted by technology. Couldn't love them more.
So I think Rocco and Guido are going to be upset that they're going to be put out of business.
That's completely true. But there's a ton of interesting ML behind the scenes there. It really is quite heavy on tech, even though it sounds like consumer debt collection.
Does sound really cool. Okay, who can top that? Who's in next? Rick Smith, what do you got? What puppy or bunny rabbit do you got?
Look, it's always the last one is the one I like the best. So the last one I led was a company called Just Auto. Just a great team, very experienced team. Which made it easier, which was our post-COVID part, made it easier because they were more mature. You could kind of get to know them better. You saw a track record. but basically providing auto insurance to people on a telematics basis, so only paying for the miles you actually drive. And in COVID, that's a great product to have because we're all paying and not driving. They are saying you only pay for the miles you drive, and focused on the underserved part of the market, which tends to get ripped off by people trying to offer cheap insurance to that cheap insurance, which is not cheap. So there's a mission behind it too. It's a good company.
Well, I was just thinking, I was looking at my phone that connects to my car, and it tells me how many miles I have, and I have a lease that's 12,000 miles a year. And since March 14th, I've driven 500 miles, but paid for 8,000 miles. So maybe their extension line is to have a lease that's based on how many miles you drive.
Right.
Because I feel like I'm turning it in at the end of the year. So I guess the auto company's going to get a good deal. Z, I know you're new, but you want to talk about one, or you can pass if you don't want to. Oh, you just did one.
I just did one. We haven't really announced it yet, but off the record, I don't know. But I've been involved in a bunch of different deals. I guess I'll say that we have Ateos is a company that we've just invested in. It's a battery company that what they've done is they've created this new manufacturing process for existing battery chemistry. So it's a platform that can be applied to a whole wide range. But the basic idea is they really shine in very small situations. They're creating these basically the power density and power of a coin cell, but it's flexible, paper thin, and customizable. You can basically just stick them on like a sticker. So ubiquitous computing, medical devices like a Band-Aid now are like a Band-Aid, IoT, all sorts of different applications. So that's pretty exciting.
It sounds like a perfect first look type company. Thank you for sharing that. Yeah. Shahin, you got to throw down now. What do you got?
I have an LA company that I'm really excited about. It's called Subspace. It falls into that category of companies that are solving the second order problem relating to COVID. So to the first conversation, we're not excited about the obvious first order problems, but we are very excited about the non-obvious second order problems and opportunities. And this is something that we helped create. We originally helped put the company together in the Bay Area. We moved it to LA about, let's say, I think it was November that we moved it down. And they are solving the latency problem on the public internet. So imagine getting a message from South America to Southeast Asia at the speed of light. And the problem that they're solving is latency for gaming. So they have some of the largest game publishers as customers. This is not a B2C company, it's a B2B company. And so they are completely invisible to the end users, but the end users are having a tremendous benefit from now being able to engage with players all over the world. And so the company has gone from 20 people to 90 people over the past 6 months, and they're doing 7 digits of monthly revenue, so we're really excited.
Awesome, and I'm super excited as you imagine that you moved it to Los Angeles to build great companies, because this is where great companies can be built. David, we saved you, I guess, for last. Any favorite puppies in the herd?
Yeah, I would go Tufan. It's autonomous heavy lift drone. It's founded by Maury Garib, who actually is one of the polymaths of Caltech, who hosted the biotech panel yesterday. It just goes to show the diversity, if you will, of how people can launch different things. And this one is really interesting because it illustrates what I was saying about go to market quickly. So it really is applied. It's an autonomous heavy lift drone, as I mentioned, and so that really is, opens up the last mile logistics market, which is where a ton of costs, like 2/3 of the cost in carbon emissions, are in the last mile. But they've been really smart in their go to market, and they're really going after large fire installations in terms of U.S. Forest Service, California Fire, who really have this acute need, as we're unfortunately seeing yet again this year, to really be responsive. And so last mile logistics is, sure, it's Amazon, it's FedEx, it's also fire and other important problems.
Well, I love Maury and love his work, and the work he's doing at the Center for Autonomous Systems at Caltech is truly amazing, and certainly the need for solutions for fire control, super important. I hope we can get the fires under control sooner, because David, that same technology could probably deliver beer kegs to fraternities at USC during a crisis. So I'm trying to lighten it up in the end. But I think we've run out of time. I really appreciate, once again, this group taking an hour to chat with enthusiastic entrepreneurs. And actually, knowing you all personally, I want to reiterate our support and kind of gratitude for leaning in Southern California. As you know, the Alliance mission is really to continue to elevate our game here in Southern California. We think we're, a great ecosystem already, but have great potential to kind of be a global leader, and is your contributions that are helping doing that. So with that, I will thank our panel for joining me, and I'll let you guys check off or bow out, and I'm just going to thank the rest of the folks, but be safe, be healthy, drink, and kind of inhale clean air. Great seeing you all. So before we call it a day, I did want to acknowledge a few folks. First, I want to acknowledge the audience, and great audience, great participation. Love the chat. It's still going full speed. I think Scott Witt is going to get the prize for the most correspondence, but these events obviously don't work unless you show up, and I know we had close to 600 people register, and a surprising number of those registrants actually showed up. So thank you very much. This event couldn't succeed unless we had the great teams from our universities. I think we had an extraordinary showing from a diverse set of universities and institutions that represent some of the best thinking and innovation in Southern California. So congratulations to them. Obviously, making an event like this couldn't be possible without an incredible team effort. So I wanted to acknowledge the generous and collaborative support of Alexander Real Estate, especially Sarah Cohen, who really leaned in with us, and also Wilson Cincini. Matt Bresnahan really did an excellent job, I think, yesterday as our moderator for our life sciences panel. I should mention that Larry Cincini, who's the chairman of Wilson Cincini, is the board or the advisory board chair of the Southern California Alliance. He's been an amazing supporter of our work, and Larry, you're the best. I felt you deserved a call out. I mentioned earlier that Darren and Len are both from Lava, who are great supporters of our work here and played a critical role in pulling this off. So I thank you for your support and assistance, especially Darren for his energetic emceeing, and Len, I know, is behind the scenes as well. We couldn't have pulled this off without my team. Steve Gillison really did an incredible job making this happen. You can imagine how difficult it is to transition from an in-person event to an event like this with 30 teams. I think we had close to 80 or 90 panelists, tireless work. I think he ended up pulling the laboring oar, and I thank Steve very much for his hard work and his leadership on making this happen. Finally, last two, I promise, I want to thank Zach Sakar, who's done a great job also making this happen virtually. He's our technical director, managing many pieces for Zoom. In addition to this event management company that he has called Ripple FX, he's also the founder of Startup Coil, which hosts the largest virtual meetup in Los Angeles. The good news is that you all are invited to attend their happy hour today at 4 p.m. It's free to attend. So the link is somewhere in the chat stream. I don't know if someone can repost it, but thank you, Zach, and look forward to pouring a cold beer with you and all the teams to celebrate a phenomenal 2 days of our first look Los Angeles. So once again, thank you all for hanging in there. Thank you all for being part of this. And here's to making Southern California an even greater global leader in innovation, technology, and entrepreneurship. With that, I wish you a good afternoon.